just to give a bit of background on what we do, I'm responsible for Kempen's listed infrastructure strategy. We invest globally in listed infrastructure companies offering a liquid solution to get exposure to the market. I think it's key, and that's what we believe at Kempen, is that the energy transition is one of the mega trends that we see in the infrastructure sector, which will result in a multi-decade secular growth story. There are plenty of opportunities, both in like renewables as well as in new energy. But for us, it's key to find the best opportunities out there. We have a fundamental bottom-up approach for that. We do that across the various sectors. So we invest in like transport infrastructure, communication infrastructure, but also the utility sector and renewables. It's key to use data to find the right opportunities. I just put out a slide here just to give an example of the data we're using. One is on the left-hand side, you see like sunshine, basically giving us an indication where in the US in this case and what the best counties are in the US to build solar panels. However, the analysis doesn't stop here. I mean, we can invest in pure play renewables, PPA contracts, but you can also invest in vertically integrated utilities. For them, it's important to manage the customer bill. So if you want to make a rotation out of like fossil fuels into renewables, you also need to manage that bill. And what we see is that, and that's more the social aspect, if you would look at the ESG side. If you would look at the customer bill, it's key to keep that stable. And what is more, it tends to be the case that when the affordability is high, so the energy bill versus disposable income is low, the community is more willing to fund the energy transition. So this is a sort of data analysis that we use, that we go out for companies, but we do not only invest in pure play renewables as said. I think for us it is important that companies are committed to Paris, but they don't have to be there yet. So although carbon intensity can be high or above average today, as long as management has identified the opportunities to rotate out of fossil fuels into renewables, we're willing to like look forward and discuss that with the management teams on the ground. In addition, what we have identified, and I think that's important to also mention, is that it's not only about investing in renewables, it's important that the grid will be upgraded. I mean, electrification, in our view, actually today offers more attractive opportunities, as a lot of capital will be needed to manage the additional capacity and renewables on the grid. What is more, I think we're all aware of that, that it's key to commit to Paris and to limit global warming. However, we do see two types of stranded asset risks. I mean, one is commonly known, that is obviously investing in fossil fuels, especially coal, that it will become incrementally difficult to finance those assets, and cost of capital for those assets will most likely go up. We have taken the view that gas is going to be a transition fuel, so that's a slightly different story, especially to balance the grid. It will be required as backup facility. I mean, we have seen incidents also with storms that, I mean, wind was not blowing for like a couple of days. Unfortunately, battery storage is not good enough to back up. So as soon as, I mean, there will be a lot of investments required to improve that. But until we're there, gas will be needed, and also hydrogen is going to be an interesting opportunity then. The other one is if the transition, the energy transition is not fast enough and global warming will actually exceed the 2 degrees scenario, the risk and the likelihood of stranded assets due to like natural disasters will increase dramatically. So the slide I'm showing here is we're able to map 23 different types of global disasters. The case here is wildfires. So with global warming, the likelihood of wildfires is going to go up. We're able to identify where the risks are and what kind of like actions are needed by management to either like harden the grid or protect our investments.